Hello and welcome to the channel. My name is Patrick and today we're going to talk about the difference between support and resistance line and trend lines. Many people mix these up and think they are the same. Here's an example of a trend line. A trend line can be straight, but it do not have to be straight. This, for example, is the macro trend line Bitcoin were following in the bull run. It followed it for 32 months and then we broke down. And in previous bull runs, it has also been following the same trend line based on Euler's natural exponential. To give you an example of a trend line. And once we go from bull run to correction, we are following another trend line that you see in yellow here, which happens to be the inverse of Euler's. So trend lines are usually sloping, they may not be straight. However, a support line like you see in green here is horizontal. A resistance line is also horizontal, as you see here, an example of in red. Sloping lines cannot be support or resistance lines, they are trend lines and they do work in a different fashion. Before we dig deeper into the Bitcoin chart, just a reminder that no financial advice on this channel or on this video. You can even see here in TradingView, when I pick a line, it says trend line. Do not say support or resistance line, it do say trend line. And if I draw a trend line like this, for example, what happens if we break it? Well, usually nothing, and we can agree or disagree upon how it should be drawn, if we should use the candles or the wicks. It doesn't really matter. What matters here is that this is a sloping line, which means it's not a support nor a resistance. In that case, you could argue support. When we do break horizontal support lines or resistance lines, usually the market do react in some specific way. Not always, but more often than not. So we have the probabilities pointing in one direction. However, when we cross a trend line, usually the probability this doesn't change at all, because Bitcoin do not know about the trend line we just draw. You might ask, but why would it know about the horizontal lines? Well, because we do have liquidation level and they are built up horizontally, not trending upwards or downwards. And we have buyers and sellers that have set buy zones, and they are also specific values. They do not change their buying values every hour. Most do not, at least. Some might do that. And this is Bitcoin some weeks ago, where I did see money drawing the first trend line like this and trying to figure out what will happen if we break this trend line. If you are on this channel, we draw a support line and said the key is what happens down here where we have support. Will we bounce or not? Usually we do, but eventually it will of course also break. So that is what we watch out for, not the sloping lines. And as you can see, what happened was that we broke the trend line and then we bounced on the support line. We went up and we bounced again. And that is what is an attribute of a support line. If you pick it in the right place, we're supposed to bounce there. Just as a resistance, we're supposed to not easily break it. We usually need to try a few times. Then we should also be aware that these lines are not so super sharp. There is more like a zone, an area, where you have a buy zone, and then you might have an area where you have a selling area. And we have had a number of these sloping lines being drawn by various places. And usually we do break them both 3 and 4 and 5 times before anything happens. And the reason for that is that the key is the horizontal lines. That is how we should assess the situation. Because when we have a dip like we have here, for example, there's usually people taking long with tight stop losses, and that build up liquidation here. Probably had the same here. And now when we enter those areas, we need to monitor what happens. And you can see when we hit this area, we did get to push down, even though we already were falling, I should say. And then we hit the next one. But then someone stepped in and bought heavily here. And if someone will be buying heavily at any point of time, that should be the support line. In that case, you have drawn it in the right area, or the zone as we talked about. And we retested this, we got heavily buying again. And this you can also confirm by looking at the volume candles, how they usually spike when we get to these areas. Here we're also going down, and when we passed this one here, we did get a little bit of acceleration down. But when we passed the next level, not much happened. But right after we got a buy, people started to buy here. So this horizontal line represented a buy zone, not a sell zone. And it is when you pass this horizontal line, you need to watch out. Is there load of liquidation here that pushed the market down? And do people get panic and sell more? Or are there people that feel like, I bought here, so I will buy at the same level again? Both of these things happen in the market, and you need to assess which one is stronger. Are the liquidations here and the panic sellers stronger? Or are the buyers that bought at this point last time, are they still buying, and are they stronger? And it's very much the same now to see when we get down here, do we still have buyers here? And if we do not, do we still have buyers down here at the, so to say, stronger support line? Goes the same for the upside. When we broke up here, we broke this liquidation level, we broke this one, and all of them helped us to push us up. But here, sellers started to sell because now we hit resistance. So the key takeaway to assess this situation, which can be drawn as a bear flag and triangles and all kind of things, it still is to monitor the horizontal lines, what happens when we hit an area where we should have liquidations and buyers, who is the stronger? And do we change direction? If we now go down, do we change direction and go up again, or do we accelerate down? Those are the observation we want to do. Then on top of that, we can draw trend lines to figure out if we are trending upwards or sideways or what is going on. But we should not use those lines that we draw as support and resistance lines. They're just trend lines. Do we trend up or downwards? And we can trend upwards or downwards in different ways. We can trend upwards where we've broken a lot of these liquidation levels and keep going up, or we can trend upwards in a way that we have not tested any one of them, and then of course the downside risk becomes larger. There are many more things to say about how to draw trend lines. There are built-in tools for that as well. I will keep that to a separate video, next video perhaps. So there you have the difference between the kind of retail technical analysis and the more quant-driven approach, where you more look at buy zone and sell zones, and there are a lot more things that can go into those analyses also, like risk-adjusted gains and those type of things that we'll come back to in the future. Thank you for watching today. Please like, subscribe, share all those things, and comment in the comment section. Hope to see you all soon again.